Welcome to another episode of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at a bearish engulfing trade setup. A bearish engulfing trade setup is really easy to identify because we're really looking for two candlesticks to identify this trade setup. In this type of a setup, it's a bearish pattern, so we're looking for price to drop after this. So let's go on to the chart and take a look at how this setup looks like, how to enter the trade, where to place our stop loss, and most importantly, where to exit the trade with a profit. Here we're looking at a bearish engulfing trade setup. This is pound US dollar 1 hour chart. A bearish engulfing trade setup is formed when we get a big bearish candle that will actually take over the previous price action. So if we were to take this candle and put it on top of this previous candle, we won't be able to see this previous candle. So the bearish candle here engulfs the previous price action. Once we get a bearish engulfing candlestick, we can look for an entry short. And I like to look for these setups at important support and resistance levels. Here we can see we are into 13900 level and price is not able to go higher, and then we get a bearish engulfing candlestick. Once we get the candlestick, we can take our entry short. This is a bearish trade setup, so we're looking for price to drop from here. We enter the trade short here and our stop would go above the high. And we stay in the trade for as long as price is dropping. Once we get into our S3 level here, we see that we also have a bullish engulfing candlestick. So this is a reversal pattern in the opposite direction. So good time for us to exit the trade. From entry to exit here, we get 70 pips in our trade. So just to recap, we are looking at a bearish engulfing trade setup. This is formed when we get a big bearish candlestick that overtakes the price action of the previous candlesticks. Once we get this bearish candlestick, we can enter the trade short. Our stop would go above this high, making sure there's enough room for trade to breathe. And we stay in the trade for as long as price keeps dropping here. Once we get a bullish engulfing candlestick or some sort of a reversal pattern in the opposite direction, this generally means that price may start to reverse now. So it's a good time to exit the trade. From entry to exit here, we get 70 pips in the trade. So our profit is 70 pips or $700 if trading one standard lot. If you'd like to learn more profitable forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/forex course. Thank you so much for joining me today. I hope you enjoyed this trade setup. If you like this episode, please feel free to subscribe to the channel as well as share this with your friends. I'll be back with another great trade setup next time.